In the last 90 days of crypto, we've had Luna collapse. We've then gone ahead and had Celsius and Voyager also go for liquidation and bankruptcy. And then you've got other hedge funds like Three Arrows Capital also liquidating.
What the hell is happening?
In this video, I want to talk about what the price action of Bitcoin, Ethereum, and some alts look like. What am I doing during this time? And the reason we're questioning whether the bottom is actually in, because we've started seeing some rallies with some coins even 2xing or 3xing during this time. If you're interested, keep watching. Hey guys, my name is Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now at the moment, we've got a lot of uncertainty around the macro environment. We've got central banks across the world all increasing their rates, people really feeling the pinch, all hoping that the market capitulates even more. For some, they don't really want that to happen, and for others, they think it's an opportunity of a lifetime. I'm probably in the latter, where I believe that we should see a correction in the market across all markets, including real estate, but I don't think it's going to be as deep as most people think. Now, with crypto at the moment, we've seen lately there's a bit more bullish sentiment. We've seen fear and greed come out of extreme fears and now starting to climb up. We've started seeing Bitcoin above $20,000. We've got Ethereum already pumping 2x on the news that the merge is coming in September, and you've had some altcoins actually go and do a 2 or 3x during this time. So the question is, have we missed out? Are we now FOMOing in back into the market? And although the answer is obvious, it might not be as obvious as we think. As I've said on the channel before, the 4 deadliest words that you can have in any investing market is "this time is different." I do believe that each market cycle has its unique characteristics, but they all mainly rhyme and repeat. So let's dive into what happened last time we saw prices like this in the last bull run. Now, going back to Jan 2018, where we saw that market top, what we saw was a decline, and it sort of looked like capitulation before we started climbing up. Now here in April to May is where I think we are positioned right now in the current market cycle. Now again, nobody knows, and this is the disclaimer that you shouldn't listen to some guy on YouTube with a black t-shirt talking about crypto and then talking about real estate and on occasions collects Charizard cards. But what we can see is that most people would have thought the bottom is in here before we started moving up. And yes, in the short term, lower time frames, it started showing that there were higher highs and higher lows. So that meant maybe we have a trend reversal before we capitulated, and then we had that cold bear market. For the next 12 months, what would look like for some an opportunity, for others was absolute depression. And I still think that we haven't seen the bottom. Looking at Bitcoin right now at 22,400, what we can see is only 3 months ago, we were trading at $40,000. So again, short term, you look at this and it just looks like pain. But if you start diving in and you see what's happened more recently is we've gone and jumped up from the $18,000 to $19,000 lows all the way up to about 24,000. But that's where I was saying, hey guys, I think we need to be careful here because the macro hasn't changed. There's nothing that's coming out that's bullish all of a sudden. And I think we need to pay attention because if that's not happening, I think this is more of a distribution phase. Maybe we're just getting manipulation where the smart money is just going and trying to move the market before they rug pull and take everyone's money. That's sort of what I was feeling. And we've gone from 24,000, dropped by about 10%, but there just doesn't seem to be that energy. There's not enough volume there. And that's getting me really excited because I didn't FOMO in. And one of those lessons I learned over the last 2 years was not FOMOing in, taking some time and understanding what the macro looks like. And I'm glad that I stayed out of this market. Ethereum only 3 months ago was trading at 2,800. So when I talk about what's been happening, it's not gonna sound as great, but we've gone from the lows of 897 all the way up to about 1,600. So you're seeing a nice sort of 2x in that. And that happened over the last month. Now that was on the back of the news that the merge is coming in September. And that's obviously a step forward into what's happening with Ethereum 2.0. As a result, people in NFTs saw that there was a bit more life because, hey, you know, if you're trading in and out of 0.2 or 0.3 ETH as profit, at least now it can pay for dinner. Whereas before, it wasn't really doing that. Now, I'm still expecting Ethereum to probably visit that 600 to 700 range. If you're interested in exactly what my breakdown looks like for, you know, the lows of Bitcoin and Ethereum, definitely go check out this video. I go into a bit more of an analysis of where I would go in. Now, Polygon Matic actually had some really interesting news come out, and that just sent the price skyrocketing. On July 14th, Disney announced it had selected Polygon alongside Lockyverse, FlickPlay to join its accelerator program, which aims to develop technologies to create new storytelling experiences. Now, again, people have an opinion about NFTs and the metaverse and what it could look like. We're in speculation mode. Most projects, about 99.9% of them, are dog shit. But what we're seeing is the narrative, the fundamentals starting to be in place for what could look like the future in 10 to 15 years. We're just early, and that's why some people shit on it, some people don't understand it, and those who do know where the smart money's going. As a result, we saw Polygon Matic systematic go from about 34 cents all the way up to about 91 cents. So about a 270% to 280% move. Not bad during a bear market, but it's very important to remember, are we trend reversing or is this a bear market rally? And I believe we're going to get to a point where we see the macro actually come in, making headlines around the recession and what's actually happening. People are going to come out of risk off assets, and that's where I think we're going to start entering our accumulation zone. Caleb here on Twitter actually has an analysis which I actually like. So he's obviously comparing the last couple of bear markets and exactly what point we saw those lows come in. And we've seen at the green arrows, we thought the low was in, but that's pretty much when it started. And then we sort of moved sideways and capitulated. Now, when we look at Bitcoin and we see it sort of moving sideways and not really much happening, the alts are getting ruined. They're getting wrecked during this time. So even if Bitcoin sort of moves sideways, you're probably protecting your wealth. If it drops by 20 or 30%, so be it. But when you look at alts during the same time, they could be dropping anywhere between 95 to 99% of their all-time high. So here what he's suggesting is that we still don't have that. We've entered the accumulation zone in May of 2022, but we've still got a long way to go. This takes a couple of months to play out. And that's why when you are looking at building a position in these markets, it's not about picking the bottoms and it's not about just selling the tops. It's about having a plan, because reality is that in a volatile market like this, you're never really going to go all in at the bottom unless you're super lucky. You're also never going to sell right at the top. So what I prefer is dollar cost averaging, and you must have heard about this on the channel as well as other people talking about this. There is a reason why people who've gone through numerous cycles in crypto have gone for a method like dollar cost averaging. Now I do this in two ways. I'm going to break down exactly how I do that with CoinSpot. Now, if you do want to sign up with CoinSpot, there's a link in the description below. We get $10 free Bitcoin when you sign up. Now, there's two steps to this. You want to have an auto setup for reoccurring deposits, and then you want to have a setup where it's the recurring buy. Now, let's just look at that. How would I set up a recurring AUD deposit? Now, what this essentially means is that your bank is talking to CoinSpot and it's just going in and depositing, so you don't have to look at it every single day. It just does it on a weekly, monthly, or on a periodic basis. Once you've logged in, you can select BPay or PayID. If you choose PayID, you will choose the email option. Now, once you've inserted all your details, again, you can find the details there on the website. Once you go through to deposit funds, you press BPay and that's where it'll be. Now, once you go in to deposit the funds, you'll have a minimum deposit amount if you're doing PayID and the daily limit as well. Now, ideally what you would want to do is if you do get paid, say monthly, or you get paid fortnightly, what you could do is if you get paid on the Wednesday, you could have the recurring AUD deposit into CoinSpot on the next day after that. That way you've ensured that the funds are actually there and you're not just going in and saying,
oh shit, I need that money for my rent.
But you're actually using money that you don't need and you're having it as part of a bigger strategy overall. Now, once you've done that, you can also then set up a recurring buy. Now, I've got a step-by-step breakdown. If this is the first time you're looking at CoinSpot or looking at getting into crypto, definitely go check out this video. It's a step-by-step process of how to get started. But here, essentially, you would go through, click on menu, you'd go into the recurring buy, and then you'd actually go in and enter the details. So in this case, if I wanted to go and choose Bitcoin, I'll choose Bitcoin here, what date I would want to start, what time, and then what frequency would I want to be actually purchasing. If I've got money in there, I would then be able to allocate how much I would like to buy worth of Bitcoin or Ethereum or some altcoins, and then I could just preview that before it continues going. You can also then cancel it at any time. Maybe you're getting a pay rise and you want to put more money in, or the market capitulates and you want to put more money in at that time, you can also do that. Once you've confirmed that removal, it's completely gone. You're back to square one. But why this is important is because for me, I'm not at my computer all the time. I've got a day job, I run a buyer's agency, that's what I'm doing full time. But if I want to build my positions during this accumulation phase where it sort of moves sideways, I don't really care if I pick up some Bitcoin at 19,000, some at 17,000, some at 23,000, because the belief is that it's going to be an asset that's going to be worth a lot more in the near future. Now, when I couple this with the roundup feature that I can get through the Bamboo app, this allows me to cover all bases. So I've got CoinSpot doing its thing, I've then got Bamboo app doing its thing through the roundup feature, and you can definitely go check out a tutorial here. It's free to download. And if you use the code Ravi, you'll actually get $10 free of Ethereum as well. So go ahead and put systems in place, because when the market becomes boring, chances are you're going to walk away from the market. This is the time where you start building up your positions. Again, this isn't financial advice. It's just common sense. When you're approaching a market that's highly volatile, your emotions will get the better of you. Now, just before this latest pump, I did go ahead and buy 2 Bitcoin. You can definitely go check out that video here as to why I did that, and I'll catch you guys in the next one. Thanks, guys.